welcome to Blockleaders.io with me, Gillian Gossel. Today, I'm delighted to welcome Jason Wu, who is founder and CEO of DeFiner, a DeFi project. Welcome to the show, Jason.
Hey, Gillian. It's a great pleasure to be here and talking more about DeFi and share my experience and my thoughts in this area.
I have to jump in at the beginning to say that you went to UCD as an exchange student. When I was going through your CD, and UCD for listeners or watchers, it's a university in Dublin. So I thought, oh, that's going to be interesting. So your background is in agri-economics, but you flipped into finance.
Yes.
How that happened?
Yes. I think economics, finance are very close. Like economics more, macro, right? More broad. Like my bachelor major is kind of in agriculture economy, so it's still kind of in a sub area. But overall, I kind of in broad majors starting. What's the change of people's behavior, and can trigger is kind of impacted by the overall change, and the quite interesting. You can put blockchain here because blockchain is one technology. And then you need to understand all what this change, this technology can bring to the people's life. It's kind of macro level, then down to the finance is more down to the specialty and the narrow area, which is regarding to the money. So I will say it's all connected together, but it's actually basically more from a broad to more narrow down. Then now it become even more narrow down to a specific technology to change this, super specific area, which is finance. So yeah.
Of course, DeFi, as it's commonly termed, decentralized finance, is going hopping mad at the moment, and it's the elimination of the intermediaries. It's peer-to-peer lending, and a lot more besides. But you were involved. You founded DeFiner back in 2018. I mean, DeFi is only hopping now. We're 2020. So tell me a little bit about the recent history of DeFi.
Yeah, absolutely. So the concept of DeFi came out from late 2018, and it started from a group in the Telegram, consists of a lot of decentralized finance. But at that time we don't have this term, but it's kind of use the smart contract to automate some financial transactions, right? But we don't have an industry. But then those projects, most of them are in US, and the same with DeFiner. And someone doing lending, borrowing, someone doing a loan, like trading, and someone doing a lot insurance. But majority of them are doing lending, borrowing. And then we want to, how can we explain this concept to people? So we need work together on this, because we know we are in the same industry, but we don't know how to call us. So that's kind of initial idea is people start to talk in the Telegram group and to figure out how to classify this specific industry. Like there's some open idea like open finance, decentralized finance, the finance. All these concepts come out, but then eventually, within that small group of people in the Telegram, then we eventually find everyone, is a consensus. Everyone feel decentralized finance and really can represent this industry, because the fundamental difference is with traditional finance is based on a custodian model, which means your money is under control of others, so you trust other people. And however, in the industry now, DeFi, decentralized finance, is your money is always in your control, but the code, which we call it a smart contract, but it's a bunch of code, can be trusted and to facilitate the transactions instead of a human. So you kind of earn back your control, but also you can still get the service. So that's the key difference. That's why one is centralized, one is decentralized. But finance, is the service itself. the finance, this service never changed. What changes is the way to perform this service. One is centralized, one is decentralized. That's why that's kind of win the name called decentralized finance, and that happened around like late 2018. And interesting for us, DeFiner is we have the name at the beginning of 2018. It's from my side, there are two meanings behind. One is decentralized finance, and we put an ER because we think through the decentralized finance, we return the power of finance back to the people. So it's going to be more, a community-driven for the human. So we put our people at the end. That's why we call it DeFiner. Also, DeFiner has the meaning like define, right? Define the future of open finance, or define the future of decentralized finance. So that's the two, the meaning behind our name, like DeFiner. But it just happened, during the discussion, end of 2018, people all agreed that's a good name for the industry. That's how the name came out from this industry called DeFi. Yeah, that's kind of the history.
You're the OG, the original gangster of the term.
So, yeah.
Pause here for a moment, and for people who are watching, maybe just coming to DeFi. Now, we think of ordinary banking, centralized banking. We put our money in there because we trust the banks, which is obviously a bit of an outmoded thing now. And in fact, I was on a conference just a few hours ago with two men from Lebanon, and they were talking about how the Lebanese government has managed to triple spend its money because of corruption. So not even double spend, it's a triple spend. They have a huge problem.
Yeah.
So I mean, so even traditional finance, we think it's safe, but it's not really, because you can get haircuts, you can get quantitative easing, you can get. We've had lots of scandals here in the banks, and it's also, someone said the banking system here. It's like you loan the bank money because of the fractional lending. They lend it out, so it's like you deposit money with the bank, and then you take out a loan. So it's like as if you have a car and you give the car to the bank, and then they charge you for driving your car. It actually makes no sense when you get back from it. So anyway, there's a lot of dissatisfaction. But the question I want to ask you, though, is with DeFi, which sounds amazing, right? It sounds absolutely amazing. And in the last few weeks, the last few days, a lot of controversy, because we had the YAM experiment where the founder said that the code was unaudited and millions flowed in, and then they discovered there were glitches in the governance and millions flew out again. And the sushi, which seems to be a bit of a scam, where the unknown founder, anonymous, took out a large sum of money, and that seems to have collapsed. The YAM one seems to be coming back. So the worry is, I suppose, Jason, is how do we trust it? How do we trust your platform?
Yeah, I think the recent sushi, YAM, they are fitting down one category of the DeFi. We call them it's more close to the fund manager, the capital allocation of the fund, they chasing the yield. So the contract actually is pretty easy compared most other DeFi project, because we call it integration contract. So they only deploy the capital, because they are chasing the yield, right? So they kind of making the investment strategy and code it and deploy the capital and generate some returns. So that's kind of only a fraction of the financial system. And but you really need to to tell what is DeFi, right? It's actually the service itself. But however, recently things, people in this field, they are crazy about token, they are crazy about the liquidity mining, and they are speculate the token price. So that makes some newcomers think that is DeFi, but that is actually not DeFi. So you need to understand the service itself, right? Because we cannot build the trust and also make the investment decisions based on promise, but you need to know what it is. So DeFi is actually the service, right? And if it is a service, it's no different. There's a barriers of building this service. So the barriers of building platform like DeFiner is technical barriers, because like in our platform, and you need to facilitate, deposit, withdraw, borrow, lend, repay, all these functions. So for the sushi, for the other, popular, project, they actually, their focus is not coding itself, but their focus is more on financial engineering. For example, the sushi, they get the code from Uniswap, right? So for Uniswap, they provided the service. However, they didn't issue Uniswap token.
Yeah.
Right. There's no Uniswap token, but the service didn't change because the sushi, they just copy the code from Uniswap, so make the same service. However, they issue the token. So that's a speculation behavior. But actually, the creator, the founder of sushi, they don't have a strong team, have the ability to keep developing the code and keep providing the service. So can you now tell like what is real like a DeFi project and what is speculator, mostly with financial engineering background? Basically, they know how to use some project and put some fancy stuff with especially the token, and make people think the token can keep going up and the people will come and buy. So that's totally two things. So
Yes.
One you can consider is a technology company like a fintech, and really try to produce the same level of service, use the code. For example, like a Uniswap, right? A DeFiner, Compound Maker. Those companies that really spend a lot of time and resource developing the code. Another group of people is more, speculator, financial engineering background. They try to utilize this kind of established players to make you think you can make more money by participating in this game. So that's totally two different stuff. So we need to differentiate it. Yeah.
You're right. I mean, and it's exciting in the sense of the interest, and it's exciting. Well, it's like car crash television at the moment, actually watching you up and down. And
yeah.
My friends, don't invest. But it's interesting. So you were there from the very start. So you're providing a service, and it's a fully,
yes.
It's not just the speculative aspect. You put your money in here, and it's going to go through the roof, and you'll get your payout, which you probably won't because it'll collapse or the owner will run off with it. So
yeah.
With your DeFiner, right? So describe your platform. It's live now.
Yes. We have, the platform has been live since last year. We launched the first product called peer-to-peer loan, and most recently we just launched our we call it savings account. So it's pure same savings account you have within your bank. So you can deposit digital tokens, which like USDT tokens, USDC token, all the stable coins, and just treat it as a savings account. Then people who are looking for the capital, like the miners, like other projects, they can come and deposit collateral and borrow money. So that's a savings account. And before, we also don't have the liquidity mining, but we also going to have the tokens, and you can own a partial right of the governance right, all the the liquidity mining of the project. But the service itself is simple. It's actually similar to a commercial bank, right? So it can take deposit and aggregate deposit, and then lend it out to people who use that. Just think about like before, it's kind of the business owners, they need to get a loan from the bank to finance their project. And within our case, they don't need to go to their traditional banks. They use our platform, which is a code, and they can directly finance from their consumers. So in this case, there's no middle person anymore. It's either between the
business owner. Do they have to put up the collateral?
Yeah.
So that their credit's not just they tie up their collateral.
Yes, right now they need to put down the collateral because in the DeFi still do not have a well-established credit system.
Yeah.
But I think in the future, once we connect or build up the credit system, then you also can get some non-collateral loan. But right now it's all over collateralized loan to protect the depositors. So that's why the default rate is pretty low.
So what type of people are looking for the loans? Are they, and what size and what duration? So are they like, it's not house mortgages, presumably?
Yes, no, it's not like, right now it's not house and mortgage, but I think eventually will be there. Right now the customer, like the blockchain miners, like there's a lot of miners, they have a lot of digital collateral, but they are looking for some cash to pay off the electric bills, the all the salaries, and they are come and take a loan. Also, there's also traders, like they are looking for building some trading strategy. They can come and get the loans. But that's the things before the area of this kind of YARM yield, all this liquidity mining. But right now, I saw a lot of people come this field is because they can mine some tokens, and they think the token, can keep appreciation. Then they come and some borrow money, and because the borrowing rate is kind of low compared what they can gain from the token they gain.
Yeah.
So also we saw a lot of demand from that side as well. I call this speculation demand from borrowing side.
And
Yeah.
what type of time limit is on these loans? Say not so much with the speculative ones, but with the miner looking to access some cash, whatever. Is it like a 1 month period, or is it a 2 month, or is it a couple of days?
So for the savings account, there's no term. It's a non-term loan, so you can borrow anytime you want, and you can repay anytime you want. The same with depositor. You can deposit anytime you want. You can withdraw anytime you want.
And how is this interest calculated daily then, is it, or how does that work?
Yeah, it's like your savings account is based on the market rate, is calculated on a daily basis.
Okay, so if you withdraw, you collect your interest, or if you're paying, you have to pay your, do the loan people, do they pay daily as well?
Yes, okay, they
so
pay daily as well.
Okay. So what about these things I've heard about, flash loans, where there's 4 transactions, 4 sides of the on a single transaction to use for arbitrage? Are you familiar with these? I mean, they seem, I heard the Aave CEO talking about them. They said you borrow the money, you buy the product, you sell the product, and you repay the money. 4 steps. And if it doesn't work, if the arbitrage doesn't work, it fails. How does that work? That's weird.
This actually have a very similar thing in the traditional financial world. But in the current traditional financial world, it's more like borrow from others to trading on your certain stock, and they borrow to the short selling, or they borrow to the leverage buying. All this hedge fund, they also doing that. But however, the key difference is it may take the settlement in the real world like 2 days, 1 day or 2 days, several days, right?
Yeah.
So they have more risk. And the flash loan in the DeFi, it happened within like 15 seconds, because it happens within 1 block.
Yeah.
On the Ethereum is around 15 seconds. So I know it's all a fancy term, but to make it easier to understand, just compare it with something we're familiar, which is the traditional financial system. But within blockchain, it just this flash loan just happened much faster, and I consider it a financial innovation, because in the real world they can never achieve this. Like they can never, achieve borrow something and do a trading, which is their trading strategy, and repay the loan back within 1 block. So it
doesn't work. If it fails, you haven't lost anything then, isn't that right? So if the arbitrage effort doesn't work, it doesn't.
Yeah.
So is that like foolproof gambling?
Because for the blockchain, there's a lot of DeFi project, right? So you can do a lot interaction between different smart contract, which is different service. So this platform, it require all the service you interact with all agree your transaction. Then it become a loop. So the people, for example, if I lend you the money without any collateral, I can ensure the money, from block A1 to block 2, and I will never lose money. If I lend you $100, from this block to next block, I can ensure you will give me back more than $100. Then that's become a loop. Then it will allow it happen. But however, if there's anything happen in this process, this loop process, if there's any process breakdown, and they will reverse all the transactions.
Wow.
So because it's all block by block, because it's it's a blockchain is still a booking system,
yeah,
and it record block by block. So yeah.
So I also wanted to ask you about, I see last year you are using the Conflux protocol, and I had a look on their site. There are some pretty heavy hitters. Oh my goodness, and the only Chinese recipient of the Turing Award. That's like mad.
Yeah.
How do you know them?
Yeah.
And they're doing a tree graph, not point of proof of work. It's a tree graph, which allows the very fast transactions. So how did you meet them, and what's it like working with them?
Yeah, because I know the founders, because he's also originally from China, then went to school over the US and Canada, and we kind of know each other. And also because if you see right now, Ethereum network is fully overload, right? Like the gas fee is very high, very congested.
Yeah.
People always want to improve the throughput. So Conflux, they look like they have a good design, but they're still not live yet. I will expect once they live, definitely we will pay more close attention to compare the performance between Conflux and Ethereum. I think for Ethereum network right now is still very, very early age. It's more like 19th of the internet. Like the capacity they can process the data is very small. Like they can only handle like 1 million transactions. That's very small amount. So there's going to be the next generation of blockchain, another generation. But the purpose is to improve the performance and throughput, right? I think Conflux target to be one of them, but it's usually verified or validated after they launch. Then people will start to come and try, and does that really work? Does that really aligned with what they described in the white paper? So I think the good performance blockchain will eventually come out if they have very good approved design. In this world, you see the proof of working, proof of work, right? Proof of staking. They are asking a proof. Yeah.
And what made you choose Ethereum in the first place? There are faster platforms around live, like EOS, for example.
Yes. So during like 2017, 2018, which is the time I decided to do the decentralized finance and founded DeFiner. And my thought at the early is very easy. Is there's a booming of digital asset, which is crypto asset or cryptocurrency. And so there's the money, right? So in finance, there's a market called debt market. But no one is doing the debt market, which is lending, borrowing. And in order to do that, you have two ways. One is centralized way, like a BlockFi sellers. Just you trust me, give me your asset as collateral, I lend you money. So that's simple. And another way is called, using the smart contract to do it automatically. And then I start to take a look at different blockchain. But I realized the key to make this model work is the trust, because the whole financial system is built upon trust. So for the traditional financial system, they either build the trust because backed by the government or by their branding. They always have a fancy building, very tall, and that's kind of a trust give people, and the people know them. But that's built upon trust of a human, which through all this legal framework like lawyer, auditor, accountant, they are all very expensive. That's what we pay for this trust. Nothing changed. Even we do it in a decentralized way, but for the financial industry, nothing changed. It's still built on the trust. So you need trust this, right? So for blockchain, in order to build the trust, one factor is crucial, which is decentralization. So that's kind of back to your question, why we choose Ethereum, not EOS. Because the EOS is only 21, kind of node, and delegate, a mechanism like a protocol. It's actually not as decentralized as Ethereum. Ethereum blockchain is the only one has very similar level of decentralization as Bitcoin, but they also have the smart contract functionality built in. So there's around 10,000 nodes. So that's the critical reason why we choose Ethereum. I think that's also the reason why all the DeFi project on Ethereum is very popular, because trust is the fundamental or the cornerstone of financial industry and financial services, which cannot be sacrificed. So yeah, that's the reason.
No, I was curious, and that makes sense. So tell me finally then, Jason, going forward, so do you expect, at the moment you've got miners who are taking loans, and when do you think your offering will go more mainstream? When do you think ordinary folk are going to get involved?
Yeah, I think start from early next year, you will see more and more DeFi projects start to serve the more the traditional, the asset loans. Even for DeFiner, it's not that difficult actually from technical perspective. It's a matter of
the UX for sure. I was on your website there.
Yeah.
Explaining, yes.
Yeah, it's not that difficult. We have a good design in DeFiner as well, and the critical thing to solve is how can you move asset from the off-chain to the chain, right? I just give you a very simple example. It's actually how to record or take the ledger of the ownership. So before, for example, if even your house, your property, people record that on a paper. Like 20 years ago, they start to move the system from paper to computer. But that computer system is just a centralized system. So it's also naturally, sometimes they start to move from centralized, the computer-based database system to decentralized one. Even now, but there's a progress and there's a process. It's always start from the easiest one with the high return. So it start from the standard product first, which means dollar, right? Currency is the standard product, right? Like US dollar is a very standard product, commodity. Then commodity, then more standard product like a financial product, like stock, equity. It's always start from standard product, then it's move step by step to non-standard product. So it takes some time and effort, but it will start slowly. But I already saw the trend start from next year. More and more like a non-standard product will bring to the blockchain. Then we can start to use that and provide the service. But I think that's not that's not the blockers for bring more and more off-chain asset on-chain and serve them. So the most important or the very crucial actually blocker or concerns actually from regulation side, because regulation is always catching up technology. It's not something like through technology we cannot do, but it's more regulation concerns. How can we do it properly? How can we make sure it's compliant with current existing all the financial system? I think for that piece, before we make a consensus, like that will take a lot of time for people to make the proper change from the regulation side.
The people are onboarding, and we're just going to wait on the regulators to make it all above board. So I'm hoping maybe in a few years' time I can buy a mortgage from you. Very cool.
Yeah.
I'll have to leave it there. I'm so sorry, I just run out of time, Jason, but thank you so much for your time. Trust is what I'm taking away from this conversation. And you're the founder and CEO of DeFiner, and I encourage people to go and look at it. It's very, very interesting. Thank you very much indeed, Jason.
Yeah, it's my pleasure to be here. Yes, good conversation.
Thank you.
Thanks a lot.